Welcome back, YouTube. So in today's video, we're going to talk about the recent rate hike of the Feds and where Dogecoin is likely to find support, because that's been a big question here now that we got the 0.75 BP hike. So getting into the information about the Fed today, we did get our fourth consecutive raise today with the 0.75. And yes, this is the highest hikes we've seen since around like 2008. And the markets actually responded pretty much very well. I'm not gonna say very well, but we did see a rally somewhat that pretty much lifted the markets out of the red, which they were prior to this announcement. Now, this announcement was well telegraphed, so it wasn't like it was unexpected or was supposed to shock the market. This is what was expected of the Fed, and they did indeed follow through. The sentiment is that this news and them staying the course, this is going to allow them to pivot a lot sooner. So this is saying that, okay, well, we must be close to the bottom now, and they're trying to kind of as much as spin this into a bottoming of the markets here. So saying that if Jerome Powell comes out in his next statement and he's dovish and the numbers are responding very well, the next 30 days, this is going to indicate that we're at the bottom. And we're going to see a rally here in things like SPY to around the 400 to the 420 range. So we're close to the bottom here. The rate hike is 0.75. It's very aggressive. And this should be one of the largest final blows that we need to get inflation under control. And that may very well be the case. We could certainly see smaller rate hikes going forward. But that does not mean that this cannot shock the market if indeed inflation is still stubborn going forward. So now, and I did want to put that out there because we've seen that the Fed has been wrong unanimously for an extremely long period of time when it comes down to getting inflation under control. And now they're really being aggressive after being wrong for about a year about things being transitory and stuff like that. So just keep that in mind that if they are wrong, or let's say they are expected to do, or they're hinting at doing like a 0.50 or 0.25 going forward, and the numbers come out and the CPI data comes out and it's not favorable, that will indeed shock the market and create a panic. And probably a lot of that panic that people were looking to see today can or will be reflected then. So kind of keep that in mind. So looking at the charts here for Doge, as a matter of fact, I'm going to go to the short chart here first and then come back to this one. Yeah, we see a large consolidation here in shorts for Doge. If you watch my previous videos, we're looking at around 24% increases every day. Well, for the last 2 days at least, we had 24% increases. And today we see a tick down of 40%, 40.41% from market open. So that's a huge consolidation in price. And as you can see, this is what I like about the momentum that Doge is having right now. The price was not affected that much as far as for them creating those, at least fulfilling those sell orders and getting the price out. We went down by about a penny and a half roughly. So the momentum is very strong. A lot of times you're going to see those wild swings when volume is low on the coin, so that when shorts come out, it's like, oh my God, they're tanking it 2, 3, 4 cents, stuff like that. Or you'll see them consolidate those positions and then you'll see like a spike up. But when momentum is steady and there, people are taking advantage of it. And especially if you have a tick down to around that 12 cent, and like we talked about yesterday, which is that 11-cent range, you'll see the investors that are long-term, because we have a long-term catalyst, they're going to be more likely to make purchases here and help keep the price more stable. But overall, we are down 11.63% for the day. And we are still consolidating in that 13-cent range. Remember, we've been talking about this for months, this trend line here, and Dogecoin is not doing anything that is unexpected. We are right on task. And I know some people are a little concerned about the Fed meeting and Doge getting this huge breakdown to about 6 cents. We're consolidating and getting rejections and trending right where we need to be. The price points that we're looking at, even here where we're getting these rejections here, you got to understand here, what does this look like going forward? Now, the Fed meeting, we could have some delayed shock, don't get me wrong, but looking at here, as far as where we're getting the rejections at in our red candles, this here is still a bullish trend. Now, as I explained yesterday, it's better if we have this stair-step approach and we build in some rejections here to provide us with some support going forward. I would rather that than to have a bunch of these giant green candles here that will trigger gap downs in the future. I would rather see some of these red candles here to give us that additional support. But overall, we're still consolidating higher. So this is not a big deal. Like last time we got our rejection here, we were at 11 cent. We're at 12 and a half cent right now with this direct rejection here. And the candle rejection, yes, I know it's down here at 12.21, but the candle has not closed yet. So we're still consolidating higher. This is still a bullish trend. So don't feed into like a lot of the FUD and the BS here going forward because it's not telling the entire story here. We have to wait for these candles to close. I know sometimes we like to anticipate what we think a candle is going to do, and we ultimately just kind of need to be patient and wait for it to close so we can have the accurate data. But ultimately, so let's say that this candle, if it doesn't close, or if we do close above the 11.6 range, that's great news for creating floors and some support areas for Dogecoin, because that would give us two support levels above the 11 cent range. And because where we get into trouble at, and I'll give these numbers out here, this is where we get into trouble at. Once we get down past like 11.17, that's where we get into trouble. That's where we see this gap down to around the 8 cent range. And if you see this white dotted line going across the screen here, that 8 cent range, you'll see we've had several bounces and rejections. Even our previous one on this trend was at that 8 cent range. So that is where we would see a significant drop in price. So these rejections and stuff like this here, even if we got another one and it consolidated at 13, that's still great for the long-term cycle of this trend here. So because once we break this second red candle here, once we break below that, that's where we get into trouble here with this gap down. But as of right now, this is fine. This is fine, especially above our previous high. This is fine. Not a big deal here. And we're not even threatening a retest at the moment, especially even with this bad news. I know the market has been a little bit more bullish, and you can say it's because of midterms or political reasons and stuff like that. I'll let you be the judge of that. But ultimately, this consolidation of being higher, this is not an issue. And this is actually very favorable for the move of the coin. And we just kind of have to keep in mind that the Fed, that will have an influence overall on the coin, but I don't believe that a large portion of the money that came into Dogecoin specifically is retail money. So I'm not saying that it's not going to react with the overall markets, but I think that it's going to be able to hold its position a lot better than something like a Bitcoin or Ethereum, something that's heavily influenced with institutional money. So you may see that it being able to hold its position a lot better. So you may see some influence or some sell-off with the coin, but it's not going to be dramatic until we get a large portion of institutional money in there. And I've had this discussion on Twitter and with a bunch of people saying that, oh, well, the market won't move without institutional money. A Dogecoin, something that's a few pennies, can move on retail money alone. Now, can retail move Bitcoin? That's a little bit more harder to push. But can retail move a coin that's 5 cent to 10 cent or stuff like that? Absolutely. That can be done on retail power alone. It's not a very difficult thing to do at these price levels. So obviously, as price increases, that movement will become a little harder. It'll take more capital to push it the same percentage, but that's just mathematics here. But this can certainly indicate that the majority of the movement we've seen so far is in fact retail, and they're holding for that that long-term objective here with Twitter and Elon. So they're going to be less likely to sell if we do see some turbulence, or take it as an opportunity to increase position if we got that breakdown. And as far as to answer the question that I titled this video, are we going to retest or are we getting ready for a breakout? I actually think we're somewhere in between. Now, the Fed can come out and give us some news that, okay, well, numbers aren't looking good. We're going to continue this and completely shock the market. And we do threaten a retest. Or Elon can say, hey, look, we're 30 days away from Dogecoin integration on Twitter. And of course, that's just going to, you can't chart that. That's going to break any of the barriers that are it's going to influence even the macros that has the effects on the coin. So the coin will rally then. That's why I was saying that if you are looking to hold long term or even swing trade, whatever your prerogative is, you want to be in before that announcement. But overall, I think that Dogecoin is actually somewhere in the middle here, and we're actually finding that new support level. And again, where we're trending at right now, we're going to see where this candle closes. So I'll have to do an update on that tomorrow. But this is great. You cannot complain about having a consolidation that's technically a higher high from your previous consolidation. That's nothing. Candles don't go straight up. I know you'll see some people saying, "Oh, it's the Fed meeting in fear is going back to 6 cent." No, the candles are indicating otherwise here, and you cannot complain about consolidating higher. So this is Dogecoin finding new support. So I am very pleased with the movement here. We've been talking about this for months, and it's right on task for where it was supposed to be, where we expected this consolidation to happen. So this is not a shocker here, especially if you've been following the channel. So that's my Dogecoin update for today. If you like the video, share the video, subscribe to the channel. Obviously, like the video. Check out Moomoo, payment for order flow free trading, and amazing notes and market updates with them as well. I have a link for them in the description section. You get 12 free stocks. And also, if you're looking to trade with me and check out my trades for the week in the stock market and stuff, I have a link to my Patreon in the description section as well. And we will meet every week, and I will go over those plays with you. I appreciate all of you. Thank you, and I will see you guys in the next video.